First, the moment I start every time, let's read what are the standards in auditing and how many standards. That will be first. We will come from end to begin. SRS 4410 compilation engagement. SAE 3420 assurance engagement report on the compilation uh, pro formal financial information included prospectus. SRS 4400 engagement to perform agreed upon procedures regarding financial information. SAE 3402 assurance report and controls to a service organization. SAE 3400 the examination of the prospective financial information. SRE 2410 review of interim financial information performed by the independent auditors of the entity. SRE 2400 engagement to review historical financial statement. SA 810 engagement report on the summary of the financial statement. SA 805 special considerations audit of single financial statements and specific elements accounts are items of the financial statements. SA 800 financial special considerations audit of the financial statement prepared prepared in accordance with the special purpose framework. SA 720 the auditor's responsibilities in relation to the information in documents containing audited financial statements. SA 710 comparative information corresponding figures and comparative financial statement. SA 705 modification to the opinion in the independent auditor's report. SA 706 SA 705 SA 706 emphasis matter paragraph emphasis of matter paragraph and other matter paragraph. SA 701 communicating key audit matters in the independent auditor's report. SA 700 forming an opinion and reporting on financial statement. SA 620 SA 620 using the work of an auditor's expert. SA 610 using the work of internal auditor. SA 600 using the work of another auditor. SA 580 written representation. SA 570 going concern. SA 560 subsequent events. SA 550 related parties. SA 540 auditing accounting estimates including fair value of the accounting estimates and related disclosures. SA 530 audit sampling. SA 520 analytical procedure. SA 510 initial engagement of the opening balances. SA 505 external confirmation. SA 501 audit evidence is specific considerations for selected items. SA 500 audit evidence. SA 450 evaluation of the misstatements identified during the audit. SA 450 evaluation of the misstatements identified during the audit. SA 402 audit considerations relating to an entity using service organization. SA 330 the auditor responds to assess the risk. SA 320 audit materiality in planning and performing the audit. SA 315 identifying and assessing the risk of the material misstatement, understanding the entity and its environment. SA 300 planning and audit of the financial statement. SA 299 responsibilities of the joint auditor. Next, SA 265 communicating deficiency of internal control to those charged with the governance and management. SA 260 communications with those charged with governance. SA 250 considerations of laws and regulations in an audit of the financial statements. SA 240 the auditor responsibilities related the auditor responsibilities relating to fraud in an audit of the financial statement. SA 230 audit of documentation. SA 220 SA 220 quality control for an audit of the financial statement. SA 210 agreeing the terms of audit engagement. SA 200 overall objective overall objective of the independent auditor, and the conduct of the audit in accordance with the standards on auditing. SQC1 Quality Control for firms that perform audit and review of historical financial information and other assurance and related services engagement. SQC1 Quality Control for firms that perform audit and review of the historical financial information and other assurance and related to service engagement. See, these are the standards. Now we'll try to drill without seeing. First, SA 4410 compilation engagement. SA 3420 assurance engagement report. Assurance engagement report on the pro forma of the financial information and including the prospectus. SA 4400 engagement to perform the agreed upon procedures regarding to the financial information. SA 3402 assurance report on the controls and at service organization. SA 3400 the examination of the prospective financial information. SA 2410 review of the interim financial reporting informing performance by independent acts of the entity. SA 2400 engagement to review financial information statement. SA 810 engagement to report on summary of the financial statement. SAS 805 special considerations of the audit of the single financial statement, the specific elements, accounts items of the financial reporting. SA 800 special considerations of audit of the financial statements and prospective uh, special considerations of audit of the financial statements prepared in accordance with the special purpose framework. ఫోన్ ఎప్పుడైపోవాలి దేవుడా ఈ సిలబస్ ఎప్పుడు కంప్లీట్ చేయాలి దేవుడా దేవుడా హబా అసలు ఫస్ట్ ఆఫ్ ఆల్ auditing standard names itself not able to remember why it happened. So we should be able to tell any standard name itself, no? Then how we will write exam there? గట్టిగా 10 స్టాండర్డ్స్ ఉన్నాయి. సరే ఓకే, లెట్స్ okay, let's start. See, question is this one. PQR associates are the statutory auditors of a large unlisted company which is engaged in the manufacturing of auto components. Subsequent to reappointment of auditor in the annual general meeting, the company shared the appointment letter with PQR Associates, seeking acknowledgement and acceptance letter. CAR is the engagement partner and is planning to issue the acceptance letter during the current financial year. There was a search by the income tax authorities on the company and certain accounting records were seized for verification based on the information available on social media. CAR noted that the promoter's brothers is contemplating to contest in the ensuing elections under the banner of the political party. Yo, ఇది MTP6 ఏనా డౌట్గా ఉంది. Perfectly model paper 6A, model test paper 6A. Did not worry at all. Concentrate on the question because it seems to be somewhere I studied. That's why. Mr. Sriman, you write important things in your notebook while studying. Okay, okay, Sriman. Okay, okay. Now, the tax authorities on the company and certain accounting records were seized for verification based on the information available on social media. CAR noted that the promoter's brothers is contemplating the contest in the ensuing elections under the banner of the political party. One of the current senior engagement team manager who has been doing the audit engagement till the last year has left PQR Associates and is planning to provide some accounting service to the associate companies. PQR Associates are నా జీవితం. See, PQR Associates are yet to recruit another senior manager having adequate experience in the audit of the clients engaged in the automotive sector. Elaborate the matters to be considered by PQR Associate with respect to acceptance and continuous client relationship considering the above issues. Dear friend, we are going to answer this like this. See, acceptance and continuance of the client relationship as per SQC1, quality control for firms that perform audit and review of historical financial information and other assurance and related service engagement. A firm, before accepting an engagement, should acquire vital information about the client. Such an information should help firm to decide about integrity of the client promoters and key managerial personnel, competence including the capabilities, time and resources to perform the engagement, and compliance with ethical requirement. The firm should obtain such information as it consider necessary in the circumstances before accepting an engagement with a new client when deciding whether to continue an existing engagement and when considering acceptance of the new engagement with an existing client where issues have been identified and the firm decides to accept or continue the client relationship or specific engagement and should document it. Oh. SRS 4410 compilation engagement. Compliance with the ethical requirement, the firm should obtain such information as it considers necessary in the circumstances before accepting an engagement with a new client when deciding whether to continue an existing engagement and when considering acceptance of a new engagement with an existing client where issues have been identified and the firm decides to accept or continue the client relationship or a specific engagement. It should document how the issues were resolved. Further, as per SA 220, quality control for an audit of financial statement, the engagement partner, the engagement partner shall form a conclusion on the compliance with independence requirement that apply to the audit engagement. In doing so, the engagement partner shall obtain relevant information from the firm and where applicable network firms to identify and evaluate circumstances and relationship that create threats to independence. In view of the above, PQR associates should follow their firm's policies and procedures for client acceptance and continuance. This include evaluating the integrity of the client, assessing potential risk associated with the management, and ensuring the firm has the necessary resources and expertise to perform the engagement effectively. The engagement team should assess whether the company is involved in any funding activities to the political parties, and if so, enquiries and assess the risk related to such transaction. Communicate communicate clearly with the client regarding the scope of the engagement, the responsibilities of both parties, and any limitations on the services to be provided. This helps manage expectations and ensures alignment between the firm and the client. Independence and objectivity throughout the engagement, any potential threats to independence, such as a relationship with a client affiliates or involvement in a political activities by related parties should be evaluated and mitigated appropriately, since the senior manager who was on this engagement is providing certain accounting services to one of the group companies. The engagement partner should assess whether it should have any impact on the audit and examine the relevant ethical independence requirement, continually monitor the client relationship for any changes or development that may impact the firm's ability to provide services effectively. This includes staying informed about a significant events such as income tax search, changes in client management, or potential conflict of interest. Since there was an income tax raid on the organization, the engagement partner should evaluate the risk of the material misstatement and non-disclosure of tax disputes and liabilities, ensure that their engagement team possess the necessary competence and capabilities to perform the audit effectively. The departure of the senior manager and the need to recruit a replacement with a specific industry experience should be addressed promptly to maintain audit quality, since one of the senior management team one of the senior management team ensure that the engagement team possess the necessary competence and capabilities to perform the audit effectively. The departure of the senior manager and the need to recruit a replacement with a specific industry experience should be addressed promptly to maintain the audit quality. Since one of the senior management team member has left PQR associates, the engagement partner should assess whether he would be in a position to devote adequate time on engagement, or whether to recruit another resources before commencement of the audit. Drafting of opinion. This next question. Fancy Limited is a foreign company providing a software service having its branch office at Delhi. During the year 2023-24, Fancy Limited incorporated a subsidiary Nancy Private Limited in Gurgaon. For furtherance, objectives of Fancy Limited entered into a business transfer agreement dated 5th October 2023 with Nancy Private Limited for transfer of all assets and liabilities along with the business of Delhi branch to Nancy Private Limited. Ongoing concern basis effective from 1st April 2023. Further necessary approval from regulatory authorities is also received on 20th December 2023. For such transfer, Fancy Limited promised that it shall provide accounting, financial, and operational support to Delhi branch, and further confirmed that any losses incurred. यार फोन గురు చెప్పు గురు. ఓకే. పాన్ కార్డ్ నంబర్ ఉందా? పాన్ కార్డ్ నంబరే లేకుండా ఎలా చెప్తా నీకు పాన్ కార్డు ఉందని? అప్లై చేశారు గురు. ఇప్పుడు పాన్ కార్డ్ అప్లై చేయాలంటే ఇప్పుడు పాన్ కార్డ్ అదే ఎప్పుడైనా చూడు లైఫ్లో పాన్ కార్డులు రెండు మూడు ఉండకూడదు, ఒక పాన్ కార్డే ఉండాలా. మరి నంబర్ అన్నా గుర్తుందా? నంబర్ కూడా తెలీదా? అట్లని కాదు గురు, అసలు ఎక్కడో చోట దేనికో చోట వాడుంటది కదా నంబరు. లేకపోతే కొత్త అప్లై చేయమని ఇంకేముంది. ఏం కాదు. ఇప్పుడు అట్ట కాదు, నువ్వు అసలు ఆన్లైన్లోకి వెళ్తే నీకు చూపించింది న్యూ పాన్ కార్డ్ అప్లై చేసినప్పుడు ఆల్రెడీ నీకు పాన్ కార్డు ఉంటే చెప్తుంది నీ పాన్ కార్డు ఉందని, లేకపోతే లేదని తీసేసుకుంటుంది అప్లికేషన్. అది నేను అప్లై చేయమంటా ఏముంది, నువ్వేం చేసి ఏమన్నా 2 నిమిషాలు పాన్ కార్డు అప్లై చేయడం. వాళ్ళకి అప్లై చేయమను. వెరీ గుడ్. చెప్పు. See, during the year 2003-20 2023-24, Delhi branch of Fancy Limited have prepared its financial statement on the basis of branch office does not continue to be a going concern and all its assets to be carried in the books of accounts and the values likely to be recorded at the time of the closure of the operations to the extent of the ascertainable at the time of the preparation of the financial statements. Delhi branch has incorporated above matter in detail from in notes 20 notes 20. ಸರ್ ಪೇಮೆಂಟ್ ಕೊಟ್ಬಿಟ್ಟು ನೋಡಿಕೆ ಬೆಸ್ದಾಳ ಇವ್ವಟ పర్లేదు బాగుంది వాటర్ చాలా ఇంపార్టెంట్ మళ్ళీ రేపు సండే వస్తుంది ఉమ్. ఇప్పుడు ఎందుకు కానీ కానీ వాటర్ తీసుకో ఉమ్. ఇప్పుడు డబ్బులు వాటర్ డబ్బులు ఇచ్చా నేను ఇయ్యాలా నేను పెడదాను అడిగాను మార్నింగ్ అడిగితే నువ్వేమన్నావు నేను తర్వాత పెడతానన్నావు సరే డబ్బులు ఎలా ఇచ్చావా నేను కాదు ఇస్తుంది అంతకుముందు నా బంగారం అబ్బా See, next, during the year 2023-24, Delhi branch of Fancy Limited have prepared its financial statement on the basis of the branch office does not continue to be going concern and all its assets to be are carried in the books of accounts and the values likely to be recorded at the time of the closure of the accounts of operations to the extent of the ascertainable at the time of the preparing of the financial statements. Delhi branch has incorporated above matter in the detailed from note 20 to the financial statement. You are the statutory auditor of the Delhi branch Fancy Limited for the financial year 23-24. According to you, Delhi branch has correctly disclosed about the matter note 20 to the financial statement regarding management intention to close the operations of the branch office. Further, you have obtained sufficient appropriate audit evidence concerning audit on the verge of the finalization of audit report. Draft suitable opinion paragraph and basis thereof, therefore, thereof, in the given case, closing, in the given case, along with the disclosure of notes 20, a suitable place in audit report, terms of the relevant auditing standard. Dear friend, while drafting the paragraph and the basis thereof, along with the disclosure note 20, independent auditors report should be like this. To the members of the Delhi branch office, Fancy Limited, report on the audit of the standards standalone financial statement. Opinion. We have audited the standalone financial statements of Delhi branch office of the Fancy Limited, the company, which comprise the balance sheet as on 31st March 2024 and the statement of the profit and loss account, statement of changes in equity, statement of the cash flows for the year end date, and the notes on the financial statement, including the summary of the significant accounting policies and other explanatory information. In our opinion, and to the best of our information and according to the explanation given to us, aforesaid financial statements giving true and fair view in conformity with the accounting principles generally accepted in India of the state of the affairs of the Delhi branch office of the company as at March 31st, 2024, and profit or loss, changes in equity, and its cash flows for the year ended on that date. Basis for opinion. We conducted our audit in accordance with the standards on auditing SAs. Our responsibility under those standards are further described in the auditor responsibilities for the audit of the financial statement section. Our report, we are independent of the company in accordance with the ethical requirements that are relevant to our audit of the financial statement as per ICAI Code of Ethics and the provisions of the Companies Act 2013, and we have fulfilled other ethical responsibilities in accordance with the requirements. We believe that audit evidence we have obtained is a sufficient appropriate to provide basis for our opinion. We draw attention note to 22 regarding Delhi branch office management intention to close the operations of the branch office is subject to regulatory approvals. Accordingly, the financial statements have been prepared on the basis that the Delhi branch office does not continue to be a going concern and provisions have been made in the books of account for losses arising or likely to arise on account of closure of operations, including the losses on the reliability of the current assets. Our opinion is not modified in respect of this matter. Emphasis matter, we draw attention to note 20 regarding Delhi branch office management intention to close the operations of the branch office subject to regulatory approvals. Accordingly, the financial statements have been prepared on the basis of the Delhi branch office does not continue to be a going concern and provisions have been made in the books of account for the losses arising or likely to arise on account of closure of operations, including the losses on the realizability, analysis on the realizability of current assets. Our opinion is not modified in respect of this matter. Next, let's go to question number C. Mr. BK has been engaged by XYZ to report on summary financial statements derived from Mr. BK has been engaged by XYZ Limited to report on summary financial statements derived from the financial statements audited by him. In accordance with the standards on auditing, Mr. BK wants to determine whether applied criteria are acceptable before accepting such assignment. Guide him the factors affecting the auditor's determination of acceptability of applied criteria as per the relevant standards on auditing. Mr. BK has been engaged by XYZ Limited to report on summary financial statements derived from the financial statements audited by him. In accordance with the standards on auditing, Mr. BK wants to determine whether the applied criteria are acceptable before accepting such assignment. Guide him the factors affecting the auditor's determination of the acceptability of applied criteria as per the relevant standards on auditing. See, Mr. BK, what he did, he has been engaged by XYZ for what? To report on the summary financial statement. Then what standard will apply? Standard SCA 801 will apply. And statements audited by him. In accordance with the standards on auditing, Mr. BK wants to determine whether the applied criteria are acceptable before accepting such assignment. Guide him the factors affecting the auditor's determination of the acceptability applied criteria as per the relevant standards on auditing. See, we are going to answer this. No. I hope single financial statement is SC 801 because 801, 810 is the summary financial statements. 801, where is 701 communicating? Where is 801? No. 805 special consideration. 810 initial engagement report on summary financial statements. Where is the single financial statement then? Special consideration. Yeah, 805 is the single financial statement. 810 is the summary financial statement. Yes, 810. Sorry, I wrongly mentioned as a 801. No. 801 is not exist. 805 is there. 810 is there. 805 is the single financial statement. 810 is the summary financial statement. In the given situation, Mr. BK has been engaged by XYZ to report on the summary financial statement derived from the financial statements audited by him. In accordance with the standards on auditing, Mr. BK wants to determine whether the applied criteria are acceptable before accepting such assignment. As per SCA 810, engagement to report on summary financial statement before accepting an engagement report on summary financial statement, the auditor shall determine whether the applied criteria are acceptable. Applied criteria refers to criteria applied management in the preparation of the summary financial statement. Factors affecting the auditor's determination of the acceptability, the applied criteria are the nature of the entity, the purpose of the summary financial statement, the information needs of the intended users of the summary financial statement, and whether the applied criteria will result in summary financial statements that are not misleading in the circumstances. Factors affecting the auditor's determination of the acceptability of the applied criteria are the nature of the entity, the purpose of the summary financial statement, the information needs of intended users of the summary financial statement, and whether the applied criteria will result in summary financial statements that are not misleading in the circumstances. Now, the question number 2 of A. Let's go to question number 2. A. Happy Hospital is a very renowned hospital for orthopedic surgeries in Mumbai, having sophisticated infrastructure. Happy Hospital has stated using a novic system which includes complete record of indoor patient, their diagnosis, their treatment, their medicines, their billings, and receipts thereon, which is developed and managed by CT Contractors CAZ, is a statutory auditor of Happy Hospitals. CAZ came to know about the system while auditing. CAZ is a concern whether the controls of the city contractors associates are operating effectively or not. For this purpose, CAZ demanded from city contractors an assurance report from a practicing chartered accountant about their opinion and their description of city contractor system and effectiveness of the control. Which type of the report should be obtained by a CAZ in terms of the relevant standards on auditing, what aspects are to be considered by CAZ in using such assurance report as audit evidence that controls at city contractors are operating effectively. Now, let's go back to the answer. In the given scenario, CAZ, as the statutory auditor of the Happy Hospitals, in concerned about the effectiveness of the control and the service organization, specifically the system managed by city contractors. To address this concern, city contractors should provide a type 2 assurance report from practicing chartered accountant as per SCS 402. Audit considerations relating to an entity using service organization. This report will offer this report will offer we are providing answer to question number 2A. Okay, for this what I am giving answer. In the given scenario, CAZ as the statutory auditor of Happy Hospitals is concerned about effectiveness of control at the service organization, specifically the system managed by city contractor. To address this concern, city contractor should be provide a type 2 assurance report from the practicing chartered accountant. As per SCA 402, audit considerations relating to an entity using service organization, this report will offer an opinion on the description of the system used at Happy Hospital, as well as evaluate the effectiveness and the controls implemented by city contractors using a type 2 report as a audit evidence that control at service organization are operating effectively. If the user auditor plan to use a type 2 report, as a audit evidence that control at the service organization are operating effectively, the user auditor shall determine whether the service auditor report provides sufficient appropriate audit evidence about effectiveness of the controls to support the user's auditor's risk assessment by evaluating whether the description, design, and operating effectiveness controls at our service organization is at the date for a period and that is appropriate for the user auditor purpose, determining whether the complementary user determining whether complementary user entity controls identified by the service organization are relevant to the user entity, and if so, obtaining an understanding of whether the user entity has designed and implemented such controls, and if so, testing their operating effectiveness, evaluating the adequacy of the time period covered by the test of controls and time elapsed performance, the test controls, and evaluate whether the test of controls performed by the service auditor and the result thereof as described in the service auditor's report are relevant to the assertion the use entity financial statement and provide sufficient appropriate audit evidence to support the user auditor's risk assessment, to support the user auditor's risk assessment, evaluating whether the test of controls performed by the service auditor and the results thereof as described in the service auditor's report are relevant to the assertions in the user entity financial statement and provide sufficient appropriate audit evidence to support the user's auditor's risk assessment. Now, question number 2b. In question number 2b, PN and associates are appointed as the statutory auditors of the Iron Company Limited. The central government hold 65% of the paid up share capital in this company. The appointment letter of the company gave a very limited time to PN and associates for accepting the audit. CAN, the engagement partner, communicated with the previous auditor, but due to lack of time, he had to give acceptance for the audit assignment before receiving reply from the previous auditor. Hence, CAN gave a confidential acceptance of the appointment and commenced the audit. Discuss with reference to the Chartered Accountants Act 1949 and the schedules thereunder, whether CAN has complied with the same. For this, answer is like this. As per Class 8 of the first schedule, Chartered Accountants Act 1949, a chartered accountant in practice is deemed to be guilty of the professional misconduct if he acts its position as a auditors previously held by another chartered accountant or certified auditor who has been issued a certificate under the Restricted Certificate Rules 1932 without first communicating the him in writing. Although The mandatory requirement of communication with the previous auditor, being a chartered accountant, applies in uniform manner to audit of both government and non-government entities. At in the case of audit government, companies, banks, or their branches, if the appointment is made well in time to enable the obligation cast under this class to be fulfilled, such obligation such obligation must be complied with before accepting the audit. However, in case the time schedule given for assignment is such that there is no time gap, there is no time to wait for the reply from the outgoing auditor, the incoming auditor may give a conditional acceptance conditional acceptance of the appointment and commence the work which needs to be attended to immediately after he has sent the communication to the previous auditor in accordance with the clause in his acceptance letter. He should make clear to the client that his acceptance of the appointment is subject to a professional objection, if any, from the previous auditors, and that he will decide about his final acceptance after taking into account the information received from the previous auditor. In the given case, PN Associates are appointed as the statutory auditor of the Iron Company Limited, which is a government company, as a central government hold 65% of the paid up share capital of the company. And CAN has given a conditional acceptance of the appointment and commenced the audit in view of the above. It can be it can be conducted that CAN has a complied with the provisions of the Chartered Accountants Act 1949 and schedules thereunder. That is the answer. Now, Question number 2C. The management of High Limited is concerned with reporting requirement cast through Rule 11 of the Companies Audit and Auditors Rules 2014 for the financial year 23-24. With regard to the audit trail or edit log, audit trails may be enabled at the accounting software level depending upon the features of the available in such software. Of the same may be captured directly in the database underlying such accounting software. Consequently, the management of the company approached CAJ and asked him to suggest them list of internal control which may be required to be implemented and operated to demonstrate that audit trail or edit log feature was functional operated and was not disabled. Help CAJ. This is a what question? For this, the answer is like this. Answer is like this. How? In order to demonstrate that the audit trail feature was a functional, operated, and was not disabled, a company would have to design and implement a specific internal control. Predominantly, IT controls, which in turn would be evaluated by the auditors appropriate. An illustrative list of internal control which may be required to be implemented and operated are given below. Controls to ensure that the audit trail features has not been disabled or deactivated. Controls to ensure that user IDs are controls to ensure that user IDs are assigned to each individual and what users IDs are not shared. Control to ensure that changes to the configuration of the audit trail are authorized and logs of such changes are maintained. Controls to ensure that controls to ensure that access to the audit trail and backup is disabled, are restricted, and access logs whenever the audit trail have been assessed or maintained. Controls to ensure that a periodic backup of the audit trail are taken and achieved as per the statutory period as specified under the provisions of the Act. Now, we would like to go question number 3. The question number 3A, what's the question? Let's go. A core limited submitted a credit proposal XYZ Bank Limited for the sanction of the term loan around 150 crores required for procuring and installing a latest plant and machinery for their upcoming project. Based on the application of XYZ Bank Limited, approached CAP to investigate profitability of the business for judging the accuracy of the schedule of repayment furnished by a core limited as well as the value of the security in the form of assets of the business already possessed and those which will be created out of the loan, elucidate the steps that should be undertaken by CAP. We are going to answer this Question number 3A. See, answer is like this. To investigate the profitability of the business for judging the accuracy of the schedule of the repayment furnished by the borrower, as well as the value of the security in the form of assets of the business already possessed, and those which will be created out of the loan, the investigating accountant should take the under mentioned steps. What are those? Step 1. Prepare a condensed income statement from the statement of the profit and loss account for the previous 5 years, showing separately therein various items of income and expenses, the amount of gross and net profit earned, and taxes paid. Annually, during each of the 5 years, the amount of maintainable profits determined on the basis of the foregoing statement should be increased by amount by which this would be increased on the investment borrowed funds. Increase the investment of borrowed funds. Annually during each 5 year, the amount maintainable profit determined on the basis of the foregoing statement should be increased by the amount by which these would increase on the investment of the borrowed funds. Borrowed funds. Now, let's go to question number 2. Sorry, what question number 2? We are talking about question number 3 only. In that A only, point number 1 I said. Now, point number 2, where we talk. See, compute the under mentioned ratios separately and then include them in the statement to show the trend as well as changes that have taken place in the financial position of the company. Sales to average inventories held, sales to fixed assets, equity to fixed assets, current assets to current liabilities, quick assets, current assets that are readily realizable to quick liabilities, equity to long term loans, sales to book debts, and sales to book debt, return on capital employed. Enter in a separate part of the statement the breakup of annual sales produced product wise to show the trend. So this is what the answer for the question number 3A. Now let's go to question number 3B. In question number 3B, CAN is a carrying out an audit of the restated financial statements of the BQR Limited for the past 3 financial years. For the past 3 financial years. Now, what we are going to do with this, CAN is a carrying out an audit of the restated financial statement of the BQR Limited for the past 3 financial years. 2023-24, 2022-23 and 2021-22. For onward submission to SEBI pursuant to their upcoming IPO initial public offer, CAN is planning to issue an audit report on 5th August 2024 covering these restated financial statements Before issuing the audit report, CAN requested the management representation letter from the management of the company. For this assignment, the management of the company provided management representation letter dated 1st April 2024 covering the period of financial year 2023-24 only, as they were not in a position to provide for the financial year 22-23 and 21-22 because they were not in place during the period. Period. How would CAN deal with the above as per the relevant standards on auditing? How would CAN deal with the above situation as per the relevant standards on auditing? For this, in the given situation, CAN, in the given situation, CAN is carrying out an audit of restated financial statements of BQR Limited for past three financial years 2023-24, 22-23, 21-22. So, he requested management representation letter from the management of the company for this assignment before issuance of the report. The management of the company provided the management representation letter only. Somebody calling, just 1 minute. यार क्या है? See, in the given situation, CAN carrying out an audit to restated financial statement of the BQR Limited for the past three financial years. Those are 23-24, 22-23, 21-22. So he requested the management representation letter from the management of the company for this assignment. Before issuance of this report, the management of the company provided the management representation letter only for the financial year 23-24, as they were not in place during that period. As per SCF 580, written representation is a written representation or necessary audit evidence. The auditor opinion cannot be expressed and the auditor's report cannot be dated before the date of the written representation. As per SCF 560, subsequent events, auditor concerned with the events occurring up to the date of the auditor's report that may require adjustment or adjustment to or disclosure in the financial statement, the written representations are dated as near practicable, but not after the date of the audit report on the financial statement. In some circumstances, it may be appropriate for the auditor to obtain the written representation about a specific assertion in the financial statement during the course of the audit, where this is the case, it may be necessary to request an updated written representation. The written representation are for all periods referred to in the auditor's report, because management needs to reaffirm that written representations previously made with respect to the prior period remain appropriate. The auditor and management may agree to a form of written representation that update written representation relating to the prior periods by addressing whether there are any changes to such written representation, and if so, what they are. Situations may arise where current management were not present during all periods referred to in the auditor's report. Such persons may assert that they are not in a position to provide some or all of the written representations because they were not in a place during the period. This fact, however, does not diminish such persons' responsibilities for the financial statement as a whole. Accordingly, the requirement for the auditor to request from them a written representation that cover the whole of the relevant period still applies. Therefore, as per the above requirement of the Standards on Auditing SC 580 CAN, should take written representation letter from the management of BQR Limited for the financial year 2022-2023 and 2021-22 also. In case in case the management of the BQR Limited does not provide written representation as requested, the auditor shall discuss with the management, re-evaluate the integrity of the management and take appropriate action, including the impact on the auditor's report as per SA 705. As per section 2 subsection 2 class 6 of the Chartered Accountant Act 1949, see, in case the management of BQR Limited does not provide a written representation as requested, the auditor shall discuss with the management to re-evaluate the integrity of the management and take appropriate action, including the impact of the auditor's report as per the SA 705. Oh. Next, this is what the answer for the that question. Next question, question number 3 of C. In question number 3 of C, CA Raj, a practicing chartered accountant, is offered to take up an appointment as a secretary in his professional capacity by the central government for metro project for a term of 2 years on a salary cum full-time basis. After giving a deep thought to the offer, CA Raj accepted the appointment. Comment in terms of the Chartered Accountants Act 1949 and schedule thereto. Now, bah, 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 bah. Question number 3 is the answer. See, for this answer, as per section 2 subsection 2 class 6 of the Chartered Accountants Act 1949, as amended from time to time, a member of the institute shall be deemed to be in practice. ಯಾರು ಫೋನ್ ಏನ್ ಪರ್లేదు ಯಾರೋ ಫೋನ್ చేస్తారు ఎక్కడ పెట్టుకుంటా పోయింది ఫోన్ ఛార్జింగ్ చేసుకుని See, dear Advocate Sreemannarayana Malala, what I want to tell you, as per section 2, subsection 2, class 4 of the Chartered Accountants Act 1949, as amended from time to time, a member of the institute shall be deemed to be in practice when individually or in partnership form. With the chartered accountants in practice or in a partnership with the member of such other recognized professional as may be prescribed, he is in consideration of remuneration received or to be received, renders such other services as in the opinion of the council or may be rendered by the chartered accountant in practice. As per clause 11 of the part 1 of the first schedule of the Chartered Accountants Act 1949, a chartered accountant in practice is deemed to be guilty of the professional misconduct if he engage in a business or occupation other than the professional of the chartered accountant, unless permitted by the council so to engage. However, the council of the institute is empowered to permit chartered accountant to practice engage in any other business or occupation considered fit and proper. Accordingly, the council formulated regulations 191 of the Chartered Accountants Regulations 1998, specifying the activities with which a member in practice can associate himself with or without the permission of the council. As per Regulation 191 of the Chartered Accountants Act, in practice may take up an appointment that may be made by the central government or state government of a court of law or any other legal authority, may act as a necessary in his professional capacity, provided his employment is not as a salary come full-time basis. In the instant case, C.A. Raj, a practicing chartered accountant, has been appointed as a secretary in his professional capacity by the central government for a metro project for a term of 2 years, not on a salary and come full-time basis. Conclusion: in view of the above given scenario, C.A. Raj will not be held liable for misconduct for acceptance of appointment as a secretary in terms of the compliance regulations under section 191, read with clause 11 of the part 1 of the first schedule of the Chartered Accountants Act 1949. Understand, my dear friend? In view of the above, in the given scenario, C.A. Raj will not be held liable for misconduct acceptance of the appointment as a secretary in terms of the compliance regulations 191 of the class 11 of the part 1 of the first schedule of the Chartered Accountants Act 1949. See, this is very, very important point, right? Acceptance of appointment, acceptance, acceptance of appointment, acceptance of appointment, acceptance of appointment. సరే సరే ఒక్క నిమిషం గురు, నేను వకాలతలు నాకు లేదు కదా, యాడ్ చేసి ఆ వకాలతలు నాకు ఇస్తే నేను గోవింద షేర్ చేసుకుంటాను, షేర్ చేసుకుంటాను. కొంచెం ఇచ్చి నీకు కుదిరినప్పుడు నీ దగ్గర వకాలతలు నాకు పెట్టు, నేను షేర్ చేసుకుంటాను. Bah. See, acceptance of appointment as a secretary, as a secretary, as a secretary, in terms of compliance, in terms of as a secretary, as a secretary, in terms of compliance, in terms of compliance, in terms of compliance, in terms of compliance, acceptance of appointment as a secretary in terms of compliance, as a secretary in terms of of compliance of regulations, compliance of regulations, compliance regulations. 191, 191. Read with class, read with class, CLAUS, class 1, class 11. Read with class 11 of part 1, part 1 of first schedule, part 1 of first schedule, part 1 of first schedule, part 1 of the first schedule of Chartered Accountants Act, Chartered Accountants, CCOUNTANTS, Chartered Accountants Act 1949. So important. Now, question number 4A. Question number 4A. MNC Limited has engaged CA Lalit to help the company in compliance of the financial information. CA Lalit explained his this engagement, the term of the members engagement. The team of the members have done mostly audit engagement and do not have exposure to compliance engagement. Discuss the key issues that CA Lalit should deliberate and guide his team members with respect to this engagement and the manner it differ from assurance engagement. Give your view applicability of SQC1 to this engagement, to this engagement. Oh, 12:50 అయింది అప్పుడే. క్వశ్చన్ ఈ పేపర్ అయిపోయిందా ఇంకేం 2 క్వశ్చన్ కూడా అయిపోయింది. See, for this answer, as per standards on auditing SA 220, quality control for an audit of the financial statements, for audits of financial statements of listed entities, CA Giri, the engagement quality control reviewer, on performing an engagement quality control review shall also consider the following: the engagement terms evaluation of the firm independence in relation to the audit engagement, whether appropriate whether whether appropriate consultation has taken place on matters involving differences of opinion or other difficult or continuous matters, and the conclusions arising from those consultations, whether audit documentation selected for review reflects the work performed in relation to the significant judgments made and supports the conclusions reached. As per SQC1, quality control for firm that perform audit and review of historical financial information and other assurance and related service engagement. Other assurance engagement, as per XQC1, quality control for firm that perform audits and reviews of historical financial information and other assurance and related service engagements. There might be difference of opinion when engagement team with those consulted and between the engagement partner and engagement quality control reviewer. The report should only be issued after resolution of such differences. In case the recommendations of the engagement quality control reviewer are not accepted by engagement partner and the matter is not resolved to reviewer satisfaction, the matter should be resolved by following established procedures or firms, like by consulting with another practitioner or firm, a professional or regulatory body. In the given situation, under completion review, CAR in the given situation under completion of review, 𝒟𝒃 engagement quality control reviewer has identified certain issues. However, the view of 𝒟𝒃 UQC are not accepted by the engagement partner. This is the difference of opinion. The 𝒟𝒃 and engagement partner should be resolved with the above mentioned manner as per SQC1. 1 minute. Oh, mobile pakne hoda. 1 minute.
number you are calling is either switched off or not reachable.
Question number 4th B. MNC Limited has engaged CA Lalit to help the company in compliance financial information. CA Lalit explained his team members. MNC Limited has engaged CA Lalit to help the company in compliance of the financial information. CA Lalit explained his team members the scope of the work and responsibilities under this engagement. The team members have done mostly audit engagement, do not have exposure about the compliance engagement. Discuss the key issues that CA Lalit should deliberate and guide his team members with respect to this engagement and the manner it differ from the assurance engagement. Give your view on the applicability of the SQC1 to his engagement. For this, what we are going to answer, our answer is As per SRS 4410, compilation of engagement is an engagement in which practitioner applies accounting and financial reporting expertise to assist management in the preparation and presentation of the financial information of an entity in accordance with in accordance with an applicable financial reporting framework in accordance with an applicable financial reporting framework and issues a report, management may request management may request a professional accountant in public practice to assist with the preparation and presentation of financial information of an entity. Financial information that is the subject of compilation engagement may be required for various purposes, including to comply with the mandatory periodic financial reporting requirement established in law or regulation, if any. For the purpose understand to mandatory financial reporting under relevant law or regulation, including example for management or those charged with governance prepared on a basis of appropriate for their particular purpose, such as a preparation of financial information for internal use, for periodic financial reporting undertaken for external parties under a contract or other form of agreement, such as a financial information provided to a funding body to support provision or continuation of a grant. For transactional purposes, for example, to support a transaction involving changes to the entity, ownership, or financing structure, such as for merger of acquisition. Assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of subject matter against criteria. It means that it means that the practitioner gives an opinion about a specific information due to which users of information are able to make confident decisions, knowing well that chance of information being incorrect is diminished. A compilation engagement is not an assurance engagement. A compilation engagement does not require the practitioner to verify the accuracy or completeness of the information provided by management for the compilation or otherwise to gather evidence to express an audit opinion or review conclusion on the preparation of the financial information. Further, SQC1 applies to all engagement and quality control standards since SA 4410 is also one of the engagement and quality control standard. SQC1 applies to firm in respect of firm's compilation engagement. 2, which is covered the related services. So that's the answer. Now, the question number 4C, we are going to answer. 4C, right? Yes, 4C. SU Limited among us. 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. మంచి సాంగ్. అబ్బా! ఇది కంప్లీట్ చేసి లంచ్కి వెళ్దాం అంటే see SU Limited is among us the top 1000 listed entities. With the introduction of a new reporting requirement by SEBI on ESG parameters called the Business Responsibility and Sustainability Report BRSR, it requires SU Limited to make disclosure on their performance against the various principles of national guidelines on responsible business conduct. One of the principles emphasizes that the business decisions in an organization should be open to disclose and accessible to the relevant interested parties. Elucidate the essence of core elements associated with the aforesaid principle. PQ Pharma Limited, a company dealing in research and development and manufacture of pharmaceuticals, is coming up with an initial public offer. PQ Pharma Limited, sorry, the question is SU Limited is among us the top 1000 listed entities with the introduction of new reporting requirement by SEBI on ESG parameters called the Business Responsibility and Sustainability Report. It requires SU Limited to make disclosures on their performance against the various principles of national guidelines on responsible business conduct. One of the principles emphasize that the business decisions in an organization should be open to disclosure and accessible to the relevant interested parties. Elucidate the essence of the core elements associated with the aforesaid principle. For this, answer is principle 1, ethics, transparency, and accountability. The first principle emphasizes that the business decisions in an organization should be open to disclosure and accessible to the relevant interested parties. The essence of the core elements associated with the first principle are the entity's governing structure should develop policies, procedures, and practices for their offices, factories, and work areas, ensuring that ethics is not compromised. The timing, the information relating to the policies, procedures, and practices, along with the performance, should be made available to the stakeholders. In case of adverse effect, more care has to be taken for transparent disclosures. The entities should proactively respond. Hello, hello, yes, ma'am. Thank you. Enna curry, ma'am. The entities, the value chain should be encouraged to adopt these principles by the governance structure. The entities should proactively respond to the outside entities they violate the 9 principles of the BRSS. This include their suppliers, distributors, subcontracts, or regulatory officers that may engage with the business concern. Now, let's go to question number 458. A PQ Pharma Limited company dealing with in research and development and manufacturer of pharmaceuticals is a coming up with initial public offer. PQ Pharma Limited has prepared the prospective financial statement for the next 3 years and included the same in the prospectus as part of its IPO.
అంతులేని చింతలకి ఆది నువ్వు కావాలి మౌనంగానే వెదకమని మొక్క నీకు చెబుతుంది ఎదిగిన కొద్ది మొదటమని అర్థవంతులోవాలి
PQ Pharma Limited, a company dealing in research and development and manufacture of pharmaceutical, is a coming up with an initial public offer IPO. PQ Pharma Limited has prepared the prospective financial statement for the next 3 years and included the same in the prospects as part of its IPO. The prospective financial information included projected balance sheet, statement of the profit and loss account, statement of which are prepared on the basis of several key assumptions like favorable government regulations, planned research and development of more effective medicines at reasonable prices, etc. The company approaches CAZ to provide assurance on the prospective financial information and to assess the presentation and disclosure of the prospective financial information included in the IPO list out the aspects that must be considered for making such assessment. For this, answer is see, this question speaks about when assessing presentation and disclosure of the prospective financial information and the underlying assumptions in addition to the specific requirement of any relevant statutes, regulations, as well as the relevant professional pronouncements. It needs to be considered whether the presentation of the prospective financial information is informative and not misleading. The accounting policies clearly the presentation of the prospective financial information is informative and not misleading. The accounting policies are clearly disclosed in the notes to the prospective financial information. The assumptions are adequately disclosed in the notes to the prospective financial information. It needs to be clear whether assumptions represent management with the best estimates or the hypothetical and when assumptions are made in areas that are material and are subject to high degree of uncertainty. This uncertainty and the resulting sensitivity of results needs to be adequately disclosed. The date of which the prospective financial information was prepared is disclosed. Management needs to confirm that the assumptions are appropriate as if this date, even though The underlying information may have been accumulated over a period of time. The basis of establishing points in a range is clearly indicated, and in the range is not selected in a biased or misleading manner. When results shown in the prospective financial information are expressed in terms of the range, and if there is any change in the accounting policy of the entity from the disclosed in the most recent historical financial statements, whether reason for the change and the effect of such a change on the prospective financial information has been adequately disclosed. For consolidation, if I go question number 5th B, R Limited, a listed company engaged in manufacturing of round bars. The company is having investment in the following components: two subsidiary companies, one joint venture company, two associate companies, three business entities under common control. Interest in assets and liabilities, revenues, and expenses in a joint operation with one company. R Limited and all its components are required to present their account as per Ind AS while preparing consolidated financial statements. R Limited consolidated its components on line by line basis by adding together like items of assets and liabilities, income and expenses, and cash flows. R Limited seek your advice on the accounting treatment in respect of the above components for consolidation in accordance with the company's Indian Accounting Standards Rules 2015. See, for this, what is the answer? The answer is like this. For consolidation of the subsidiaries in accordance with the companies in Indian Accounting Standards Rules 2015, the financial statements of the parent and its subsidiaries are combined as per Ind AS 110 consolidated financial statement on line by line basis by adding together like items of assets, liabilities, income, expense, and cash flow. Related to goodwill and capital reserve are gain on the bargain purchase and non-controlling interest determined as per Ind AS 103. The business combination involving the entities of the business under common control shall be accounted for using of the pooling interest method in accordance with DS 103. Adjustments like elimination of the intra-group transactions, balances, unrealized profit, and deferred tax HC are made in accordance with the requirement of India's 110. Investments in associates and joint ventures are accounted for using the equity method as prescribed in Indian Accounting Standard India's 28. Investments in associates and joint ventures, interest in assets and liabilities, revenue, and expenses in a joint operations are accounted for as part of the separate financial statement. The entity, in accordance with the Indian Accounting Standard, Ind AS 111 and joint arrangement. In a business combination achieved in this stage, the acquirer shall remeasure its previously held equity interest in the acquiree at its acquisition date. Their acquiree at its acquisition date the fair value and recognize the resulting gain or loss, if any, in profit or loss, or other comprehensive income as apportioned in accordance with India's 103. In the given situation, R Limited is a listed company having investment in the one of two subsidiary companies and joint venture companies and two associated companies, three business entities under the common control. Interest in assets and liabilities, revenues and expenses in a joint operation with the company are limited, and all its components are present their required to present their accounts as per Ind AS. In view of the above, R Limited consolidated its components on line by line basis by adding together like items of assets and liabilities, income and expenses and cash and flow, with a preparing consolidated finance statement which is correct for the subsidiaries. However, however, as per Ind AS view, R Limited consolidated its components by line basis by adding together like items, assets, consolidated, which is a correct for subsidies. However, the treatment is not correct for the company's component as per the above mentioned company's Indian accounting standards. Now, let's go to question number 50C. TP Limited is a listed company engaged in the business of manufacturing of kits, garments, under the brand name of Mr. R&A Associates. Firm of chartered accountants are appointed as a statutory auditor of the company. For the year 2023-24, CAR is looking after the audit of the company. During the audit, CAR observed that there are number of notices received from GST department and income tax department for various issues. Further, during the plant visit, CAR observed that few child laborers are engaged in some of the activity in response to the observation made. CAR followed the procedures as envisaged in Standards on Auditing 250, consideration of laws and regulations in an audit of the financial statements. According to CAR, the provisions of the Standards on Auditing SA 250 and the provisions of NOCLAR, non-compliance with the laws and regulations, under review under revised code of ethics, and the same, do you agree and not give your comments, and you if not give your comments. Question is TP Limited is a listed company engaged in the business of manufacturing of kids garments under the brand name of and Miss or associates. Firm of chartered accountants are appointed as a statutory auditor of the company. For the year 2023-24, CAR is looking after the audit of the company. During the audit of CAR, observed that there are number of notices received from GST department, and income tax department for various issues. Further, during plan to visit, CAR observed that few child laborers are engaged in some of the activity in response to the observation made, CAR followed the procedures as envisaged in Standards on Auditing 250, consideration of laws and regulations in an audit of the financial statements. According to CAR, the provisions of the Standards on Auditing 250 and the provisions of no CLAR, non-compliance with the laws and regulations under revised code of ethics are one and the same. Do you agree? If you not, give your comments. See, friends, for this answer is in the given situation, CA are looking after the audit of the TP Limited, a listed company. During the audit of CAR, observed that there are number of notices received from GST department and income tax department for various issues. Further, during the plant visit, CAR observed that few child laborers are engaged in some of the activity in response to the observations made. CAR followed the procedures as envisaged in Standards on Auditing 250, considerations of laws and regulations in an audit of the financial statements. Assuming the provisions of Standards on Auditing 250 and SA 250, provisions of, see, consideration of laws and regulations in an audit of the financial statement, assuming the provisions of the Standards on Auditing 250 and provisions of the non-compliance with the laws and regulations under the revised code of ethics one and the same. However, following points indicate the provisions of the SA 250 non-compliance with the laws and regulations under the revised code of ethics are not one and the same. SA 250 is applicable only on audit and not on other assurance engagements. However, non-compliance laws and regulations is applicable on professional accountants in service and in practice. SA 250 talks of auditor responsibilities for laws having direct effect on the determinations of material amounts and disclosure in the financial statements, such as a tax and labor laws and other laws and regulations that do not have a direct effect on the determinations of the amounts and disclosures in the financial statements. About compliance, with which may be fundamental to the operating aspects of the business. Non-compliance with the laws and regulations, while being a like to the Standards on Auditing 250, till this point is further ahead. In that, it takes into account non-compliance that causes substantial harm, resulting in serious consequences in the financial or non-financial returns, financial or non-financial terms. Standards on Auditing 250 till this point is further ahead. H in that takes into account non-compliance that causes substantial harm, resulting in serious consequences in financial or non-financial terms. SA 250 does not define stakeholders. Non-compliance with the laws and regulations is related to effect of non-compliance on investors, creditors, employees, as also general public. As per non-compliance laws and regulations is in exceptional circumstances, the professional accountant might become aware of an imminent breach of law or regulations that would cause substantial harm to investors, creditors, employees, or the general public, having first considered whether it would be appropriate to discuss the matter with management or those charged with governance of the company. The accountant shall exercise professional judgment and determine whether disclose the matter immediately to an appropriate authority in order to prevent or mitigate the consequences of such imminent breach. If disclosure is made that disclosure is a permitted, this provision is not existent in standards on auditing 250. Next, let's go to question number 6A. You are appointed as a statutory auditor of SGL Limited for the year 2023-24. In the place of CAT, during the audit, you found an order dated 1st May 2023 under Section 148 of the Income Tax Act 1961, wherein tax 50 lakhs was demanded owing to undisclosed cash sales 150 lakhs for the financial year 2020-21, which was accepted by the company, and the acceptable tax laws applicable tax was paid by the company during the year 2023-24. On further inquiring the matter with the CA, you came to know that CAT resigned due to non-recording such transactions by the company. Is there any reporting responsibility cast on your regarding to the above matters under CARO 2020 for the year 23-24? See, for that answer is like this, my dear friend. See, basically, logically, technically, reporting under paragraph 3 of the CARO 2020 class 8 of paragraph 3 CARO 2020 requires the auditor to report whether surrender paragraph under paragraph 3 of CARO 2020 class 3 of the paragraph 3 CARO 2020 requires the auditor to report whether any considerations and not recorded in the books. In addition to para 8, paragraph 3 CARO 2020 requires the auditor to report whether there has been any resignation of the statutory auditor during the year. If so, whether the auditor has taken into consideration the issues, objections, or concerns raised by the outgoing auditors. In the given situation, during audit, an order dated 1st February 1st May 2023 under section 138 See, in addition to class 8 paragraph 3 of the CARO 2020 requires the auditor report whether there has been any resignation of the statutory auditor during the year. If so, whether the auditor has taken into consideration the issue of the objections concerns raised by the outgoing auditor. In the given situation, during the audit, an order dated 1st May 2023 under Section 148 of the Income Tax Act 1961 was noticed wherein the tax 50 lakhs were demanded owing to undisclosed cash sales or 150 lakhs for the financial year 2021, which was accepted by the company, and the applicable tax was paid by the company during the year 2023-24. The company has not recorded such undisclosed income their books of account during the year 2023-24. The auditor would be required to report as per class 8 of the paragraph 3 of the CARO 2020. Further, CAT, the auditor SDL Limited resigned due to non-recording of such undisclosed income in their books of account. The auditor would be required to report the same in CARO 2020 as per class 18 paragraph 3 of CARO 2020. Remember, important. Hence, auditor would be required to report as per class 8 and class 18 paragraph 3 CARO 2020 as per the financial year 23-24. Now let's question number 6b. MNC Limited is engaged in the manufacturing of the sale of FMCG products. It has a manufacturing locations across various states in India and engages dealers channels to sell its products. One dealer is appointed for each district within the state, and products are dispatched from the nearest manufacturing locations to the dealer. Considering the voluminous transactions, MNC Limited has a robust ERP network for rendering the transactions. As a statutory auditor of MNC Limited, your firm is about to commence the current year audit. The audit team includes certain IT experts, and discussions are underway amongst the team member as an IT manager of the engagement team. Explain the key areas for an auditor to understand IT environment. The key areas for an auditor understand IT environment. Key areas auditor unaudited understand IT environment are as follows. Understand the flow of transaction. The auditor understand of the IT environment may focus on identifying and understanding the nature and number of the specific IT applications and other aspects of the IT environment are relevant to the flow of transactions and processing of information system changes and flow of transactions or information within the information system may result from paragraph change to IT applications or direct changes to database involved in processing or strong those transactions or information. Identification of the significant system. The auditor may identify the IT applications and supporting IT infrastructure concurrently with the auditor's understanding of how information relating to significant classes of transactions, account balances, and disclosure flow into through and out the entity information system. Identification of manual and automated controls. An entity system of internal control contain manual elements are automated elements, manual and automated controls, and other resources used in the entity system of internal control. An entity mix of mutual and automated elements varies with the nature and complex of the entity use it. The characteristics of manual or automated elements are relevant to the auditors. Identification and assessment of the risk of material misstatement. Identification of the technologies used. The need to understand the emerging technologies implemented and the role they play into the entity information processing or other financial reporting activities, and consider whether there are risks arising from their use. Given the potential complexities of these technologies, there is an increased likelihood that the engagement team may decides to engage the specialists and or auditors, experts to help understand whether and how their use impacts the entity's financial reporting process and may give rise to risk from the use of IT. Assessing the complexity of the IT environment. Not all applications of the IT environment have same level of complexity. The level of complexity for individual characteristics differs. Across applications, complexity is based on the following factors: automation used in the organization entity, reliance on system generated reports, customization in IT applications, a business model of the entity, any significant changes done during the year, and implementation of emerging technologies. After considering the above factors for each application, the over complexity is assessed of the IT environment. After considering the above factors, for each application, the over complexity is assessed of the IT environment. Now, question number 6C will see. This is the last question, I hope. Yes. Question number 6C. C.A. Kumar, a practicing chartered accountant, is well known in the field of pleading income tax cases at income tax tribunal and does not provide any assurance services. Considering the long standing in the field of, C.A. Kumar is approached by XYZ Limited to file an appeal in the tribunal against the income tax demand of the 10 crore, which was added by the CAT appeal, and to plead on behalf of XYZ Limited. In the matter, C.A. Kumar offers to accept the case with the following fee structure. The fee for filing appeal and plea to the income tax tribunal will be higher of the following ARB: 5 lakh or 10% of the tax demand reduced. Comment on the act of C.A. Kumar in terms of the Chartered Accountants Act 1949 and the schedules thereon. C. Restriction fees based on a percentage. According to Class 10, Part 1, First Schedule of the Chartered Accountants Act 1949, chartered accountants in practice shall be deemed to be guilty of a professional misconduct if the charges or offers to charge accepts or offers to accept in respect of any professional employment fees which are based on percentage of profit or which are contingent upon the findings or results of such employment except as permitted under any regulations made under the act. However, Regulation 192 allow the chartered accountant to practice to charge the fee in respect of any professional work which are based on percentage of profit or which are contingent upon the findings or result of such work. In the case of non-assurance services to non-audit clients, the fee may be based on the percentage of the tax demand registered. In the given case, CA Kumar practicing chartered accountant provide non-assurance services. He is approached by XYZ Limited, a non-audit client, to file an appeal in the tribunal against the income tax demand 10 crore, which was added by the CIT appeal and plead on behalf of XYZ Limited. In the matter, CA Kumar offers to accept the case and agrees to charge fee either 5 lakh or 10% of tax demand reduced which is higher. Conclusion. Therefore, Mr. Kumar will not be held guilty of the professional misconduct since he is not providing any assurance services to non-audit clients pursuant to regulations of 192 and read with class 10 of the part 1 of the first schedule. And next question. A Kushal Private Limited, a company engaged in the trading activities, it also has made investments in shares, other companies, and advanced loans to group companies amounting to more than 50% of total assets. However, trading income constitute major of its total income, whether the company is an NBFC. Whether company is an NBFC. Answer. In order to identify a particular company as a non-banking financial company NBFC, it will consider both assets and income of the pattern as evidenced from the last audited balance sheet of the company. To decide its principal business, the company will be treated as a NBFC. When a company financial assets constitute more than 50% of the total assets netted by intangible assets and income from financial assets constitute more than 50% of the gross income, a company which fulfill both these criteria shall qualify as a NBFC and and would require to be registered as the NBFC Reserve Bank of India. In the given case, though Kaushal Private Limited is a fulfilling criteria on the asset side, but however it is not fulfilling the criteria on income side, the company cannot be classified as a deemed NBFC. Dear friends, dear friends, dear friends, I am going to lunch. We'll come back by 2:30 or 3 o'clock. We'll start financial reporting and advanced financial management. We are going to deal comprehensively all questions. We'll solve all questions with pen and paper. Otherwise, plan for financial reporting, India's summary. We are going to talk much more. Thank you, friends. Thank you. Thank you, one and all. Thank you very much. Bye bye. See you. Tata.